Good Friday afternoon to you. Welcome to the Jon Sanchez Show on News Talk 780 KOH. Pleasure to be with you. Happy Friday, and a pleasure to be with my partner, Jason Gaunt. Woo, what a ride it was today, JG. What a ride it was today. My goodness. This was not the Friday that I expected. I honestly thought this would have been a Friday where everybody was in a good mood after gaining over 1,000 points on the Dow on Wednesday, Thursday combined. And here we come in today, and all of a sudden everybody goes, I don't want crypto. I don't want AI. What a mess it was today, just to be real blunt.
So
I
are we
know,
going to
you're
jump
gonna say
right
it's
in? We're going to jump right
normal.
in. We're going to jump
Yeah,
right in.
we're going right into it. Man. We're going right into it.
I think it's two things, several, but two things. We'll talk about Sam Altman, OpenAI making comments about Oracle and some chatter, even though Oracle refuted parts of it, that they were going to delay their data center build by a year. That freaked people out a little bit. And I also think the more so it is people taking profits going into the end of the year. Volumes are going to be terrible over the next 2 to 3 weeks. Hedge funds taking down exposure, sort of pulling away from the bets that they had. When you take down leverage, right, you're selling the stuff you own and covering some of the stuff you are short and calling it a year. Because I think most, by all accounts, probably did fairly well this year. Hopefully you did as well. I think that was part of it. We've had a great run. We got to all-time highs. There's really only two directions you can go, and path of least resistance on what was fairly low volume even today was lower. So I don't think there's a lot to take from it other than it's been a good run, and we're just back in that range, the one we've been in for several weeks. The market needs a new catalyst to break higher, or it'll sit here and chop around for a while into the end of the year.
All right, we're going to jump right into it. As you can tell, our comments here. Let me tell you, which I normally wait till after the first break, but I need to set the table of where we finished at, and then we're going to back into what happened today. So when it was all said and done, it wasn't all that bad. An extreme amount of volatility. We shot up over 200 right at the open on the Dow. Slowly but surely drifted lower, and then bunch of big sell-offs afterwards. Finished down 245, just a 0.5% loss to 48,658, or excuse me, 46,458. Let me rephrase that again. 48,458. There we go, John. Get those, almost got dyslexia there. 48,458, the close of the Dow. NASDAQ lost 399, 1.69%, closing at 23,195. S&P down 74 points, or 1.07%, and about a 1.5% loss on the Russell 2000. For the week, okay, now we again had some very strong days. As Jason said, we had a record close yesterday on the Dow and the S&P. Today we hit an intraday all-time high on the Dow. Obviously did not close there, but for the week, again, not the best. For the week, the S&P was down 0.6%. NASDAQ lost 1.6%. Dow, however, was up 1.1% for the week. Small caps, the Russell 2000 higher by 1.2% for the week. So, Jason, let's begin to dissect some of those great comments that you just made for a second ago. Start off with before you do that, folks, let's kind of give you the 10,000 foot view, and then we're going to drill down to ground level. So this was a day where, again, as we've experienced a few times this year, where traders woke up and went, I don't want anything AI related, right? There's overvaluation, there's this problem, there's that problem, and they sold it off. Crypto also sold off today. Specifically, of course, of Bitcoin. That never helps the stock market when that happens. We've gone through that trade with you many times before. Now, Jason, break down what Sam Altman, one of the co-founders of OpenAI, i.e. ChatGPT, had to say about Oracle, etc.
Yeah, there were just some chatter that they were going to delay some of the build out for one of the larger data centers for a year and caused the market to spook a little bit. Yet Broadcom had results last night. That's been the one that has been
good results.
Exactly. And it was down 11+% today.
0.44. Yep.
Sell the news, right? And that's the hard part, right? We've talked about a ton. Good stocks are good stocks, but you also want to buy good stocks when they're cheap, right? Even though the story is good, you want to make sure that you're not getting on the roller coaster at the high point. And I think Broadcom's one of those stories where they've outperformed. I mean, heck, I think they're up more than NVIDIA this year, but that name, that story has been well thought of as almost impenetrable, in that no matter what, Broadcom's in a situation that they're going to win, whether it's AMD or NVIDIA. So that is another, I'd say probably third thing then, is their weak numbers didn't help a lot for that AI sentiment. That the bears have that story, I feel like, near term. The momentum is to the downside with the skeptics with AI, with NVIDIA, with
I think you're
the
being too hard
over.
on Broadcom. I mean,
What's
they
that?
had good earnings numbers. Why are you saying that?
Because the stock's down 11% on good earnings, right? That
Yeah.
means that there's more sellers than buyers, that momentum is deteriorating. People were waiting for earnings to sell, right? And so when earnings, even if they were lackluster relative to whisper, right? Remember, the thing that a lot of retail owners don't hear about is whisper numbers. Even though the street was at and blah, 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 hedge funds are somewhere else. Big tech focused analysts are somewhere else in terms of what they're expecting from the company or what data they're expecting to hear from the company, not the main street 22 cents of earnings type stuff.
Right.
So if they don't hear all the buzzwords and all the things that make them want to get incrementally more bullish, it's easy to get at least less bullish, which creates a down 11% type day in a high momentum name. I mean, Broadcom typically trades up or down 4 to
How do
5%
you,
normally.
okay,
Yeah,
let's get off Broadcom for a second, though.
sure.
How do you go from 2 days in a row, right? So let's go back to Wednesday. It gives us an interest rate cut. Powell makes it pretty clear, hey, we got, quote, quote, at least one next year, which everybody thinks is going to be much more than that. So overall, a very, very good Fed meeting, press conference, etc. Dow rallies almost 500 points on that news. Yesterday, the Dow rallies almost 600 points yesterday. Everybody was giddy, right? Everybody was loving everything, right? I mean, like you and I discussed, we're seeing broad rotation. We have seen that, to your point, we have seen that rotation coming out of AI these last couple of days. I think, like you said, you got two of the big boys, Oracle, which has been struggling these last couple of days, and then, like you said just now, Broadcom. But what got me today was, why did we see weakness in, let's just go Caterpillar, right? Stock was a disaster
Momentum.
today. Yeah, lost over $27 today.
I think Cat Tractor's up 50 something percent this year.
Yeah.
Like, it's momentum, right? Remember, momentum is a thing, right? The stocks that exhibit momentum. What is momentum? If you take, again, nerding here a little bit, quantitatively, the term momentum, the factor momentum is last 12 months minus the last month, to show how you buy the stocks that have done the best and you short the stocks that have performed the worst. Physics, objects in motion tend to stay in motion unless acted upon by earnings. So in this case, momentum, that is the factor that was underperforming today. So the names that have been your winners,
Goldman,
people sell baskets, exactly. So Goldman, Cat,
23
all those
bucks.
types of things, those are momentum trades. So when you're looking at your portfolio, folks, and you get those names that have continued to exhibit upside momentum, I bet lots of them all were down today. And it's because people are selling high momentum and buying low momentum stocks, right?
Let's put it in English. They're selling the stocks they've made a lot of money on here, and selling the winners and rotating in. So great analogy, great explanation. So folks, let me pause right there and kind of bring this down to some dollars and cents. So I was uttering out Goldman and all these others. So just to give you an example, Goldman, again, been on fire recently. Today down $23.07, 2.5% loss. Nvidia down $6.05, 3.35% decline. Cat was the worst performer. It was at the bottom of the Dow list all day long, down $27.72, 4.43%. But guess what? All of a sudden, you're interested in cheeseburgers and Happy Meals. McDonald's led the group, right?
We can talk
$6.78.
Yeah, we can talk ETFs now. So MTUM, Mary Tom Uncle Mary, that's a momentum ETF. Inside of that owns momentum stocks. They rebalance the portfolio. They own stocks that are moving up, right? Again, not a pitch on it, but that is an allocation for folks who want to get on a train that's moving. On the flip side of momentum, you can look at low vol. PLV is the low vol ETF. Momentum was down 2.5% today. PLV was up 60 basis points today, right? Those are the things that I, as a trader, watch is, what is low vol doing? What's momentum doing? What are quality stocks doing, right? These are the things that are moving these names. Oftentimes, a stock or two, it is a factor of some kind. And you see these rotations where momentum gets overbought, they sell out of it and rotate back into the names that have underperformed. And I think that's a bit of what we're seeing today. And it could continue to happen for some time as folks de-risk into the end of the year. It's nothing ephemeral, but it's just one of those rotations that get you, and they tend to be big moves like this.
To Jason's point, the MTUM, the ETF, again, momentum ETF, just to give you a perspective, through today's close, the ETF's up 20.57% year to date. Today, again, down $6.60, 2.58% loss, 249.46. Yeah, there it is right there. That's a great indicator, folks, that we look at. Again, whether we're in a momentum, a value, whatever. But again, you for the average person, Jason, you sit back and go, wait a minute here. My Mag 7 just got crushed today, right? Let's go through some of the Mag 7 names. So you had Apple, it was quiet, down 41 cents. Amazon down $4.23. Goog down $3.88. Meta down $9.83. I'm throwing in some after hours here. Microsoft, as I said, $6.23 loss. Nvidia $6 loss. Tesla, really the only one of the Mag 7, up $9.23. So 6 out of the 7 Mag 7 down today. Why? Exactly what you just said, that momentum. So that's an excellent analogy there.
You need to, these are things you want to be watching all the time, even though you don't trade them, right? You need to build that toolkit, the canaries, whether you have NVIDIA on your screen or Palantir on your screen, to say, what are the high momentum names? Go screen out some of the more value-based or sleepy staples that were up 60, 70 basis points today.
This is what about the memory serves me correctly, I think this is about our third time this year that we've seen this rotation just very abruptly, where you've got this rip to the top on the momentum names, and then it's like it hits a wall, and then we rotate into, like I said, the likes of McDonald's and Coca-Cola was the third best performer in the Dow, up 1.5%. Verizon up almost 1.5%, right? So I think, who knows if it lasts, right? You and I always talk about when we have these type of days, you go, okay, is this the true rotation we're going to see? And time will only tell, but they haven't lasted that long before. So we may want to look at this again as a buying opportunity. I mean, if we didn't have cat in our portfolio, I would have been urging you to, let's buy some more today with this loss, and same with NVIDIA and so on and so forth, but it'd screw up our cost basis, which we don't want to do for our clients. But yeah, it was a very, very interesting day. And especially what caught me off guard again was coming off the strength of these last couple of days. Thought for sure Fridays tend to be, pretty good days in the market by all accounts, but boy, they did not want anything momentum driven today. So good point, my friend. All right, we'll continue talking about the market, what's happening, the direction. Again, wrapping up the week on Wall Street for you. Let's turn it over to Kristen Snow right now, Traffic Center. Go back to the Jon Sanchez Show on Newstalk 780 KOH. Happy Friday to all of you. Once again, a 246 decline on the Dow, down 3. My eyes are blurry today. 398 on the NASDAQ, and a 74 point decline on the S&P 500. That's when I know I'm tired, Jason, when I'm squinting at the small numbers on the quote screen here. All right, let's go to the commodity side, and then we're going to come back to things that moved this trading session. 15-cent loss on the oil price, $57.76 a barrel, up $14.90 on gold, $4,327.60, and a 5 basis point increase on the 10-year Treasury, 4.19. Well, again, we get a 0.25% cut, and this is what we tell you, folks. It doesn't matter what the Fed does. It's all matter what the bond traders do. Actually had a 5 basis point increase in the yield of the 10-year for the entire week. So nothing major, but obviously went the wrong direction as always. All right, all you pot smokers out there, now you can relax a little bit. The president's coming to your rescue. President on Monday is expected to sign an executive order to reclassify marijuana, according to people familiar with the situation. He's going to basically drop down the classification. It's going to drop down to a less regulated Schedule 3 drug from Schedule 1. Now, if you wonder what's a Schedule 3 drug, well, it goes from a Schedule 1, which pot is classified with heroin and others. That's where it is currently until Monday. And then it's going to drop to the Schedule 3, which it'll be classified along with steroids and Tylenol with codeine. Those are examples of Schedule 3 drugs. Trump is rescheduling marijuana was not an if in our assessment, but when, according to Compass Point, a middle market investment bank, as they wrote to their clients about this. The reaction to the stocks, Jason, they weren't up in smoke by any means. Tilray Brands, and this is again including some after hours right now, up $4.40, a 52.18% gain today. Remember talking about it with Ryan this morning on the stock updates, and it was up a little over 30%. Yeah, continue to move higher, 52.18% gain to $12.82. Innovative Industry Properties, which is a another company in this space, up 10.34%, but a major mover. Talking about ETFs, Charlie Nancy Boy Sam is the symbol, CNBS, which is Amplify Seymour Cannabis ETF. 90.75% gain today, up $20.44 to $42.97. I don't think I've ever seen these pot stocks move like this before.
Well, because they're short to the gills, I'm sure lots of short holders inside these things.
Yep. And then you wonder, okay, so how would this news benefit these stocks? That's what I've been trying to answer all day to myself. I'm thinking, okay, so they move it, they classify it down. I assume it's still going to be federally illegal. We know, of course, states allow it and many states do. But is this going to prompt people to go out and, for example, buy from Tilray Brands and Canopy Growth and some of these major growers out there? And I can't find an answer as to yes. So I think to your point, it was a short squeeze today.
And then what about people who are in jail for drug offenses?
I was wondering about that.
Pot, right?
Yep. Well, but how does that benefit these companies, though? Right? What's making these companies move? Yeah.
Short the jail stocks.
Yeah. Yeah, I don't know, but it's amazing. It's amazing. All right, let's go back to the Oracle situation. So Oracle today again was under pressure, $10.34 loss again, a little after hours, down 5.2%, 188.55. What the heck happened with Oracle and OpenAI today? Let's go into some more details about this.
Yeah, I mean there were some comments made about the OpenAI. Remember, that's the whole reason that Oracle's been acting great and then terrible is many of the other Metas and Microsofts and Amazons, et cetera, that are making promises and all these relationships with OpenAI and the circular accounting we talk about. Most of them are doing it with like free cash flow, like money that they're seeing come in from customers to fund these businesses. We've talked ad nauseum about NVIDIA has so much money, they just don't know what to do with it. Whereas Oracle technically needs debt to finance their build out for data centers. And I believe the number was like $300 billion that OpenAI was going to spend with them or give them, or whatever the term was that made the stock go parabolic on earnings up to the $300+ level. And now it's trading at 190 something, 189. And because people started to just think it through a little bit, like, okay, if OpenAI can't make these promises, the $1.5 trillion+ of spending they're going to have, who's the one that's going to be the most hurt relative to their needs? It would be Oracle. And you've seen the credit default swaps, which are, call them protection for debt, right? An option, a put option on debt, have gone up a lot. The value has increased quite a bit as people are making negative bets on Oracle debt. Therefore, that creates pressure on Oracle stock. And with this, someone used the term today of an already, aggravated sore around AI and the concerns around it being a bubble, with OpenAI and Oracle making, again, some of it was refuted. I didn't see it at the end of the day, but they were saying that they were going to delay this data center build from starting in 2027 to 2028. And that's the worry is. And then it becomes 29 and we're only going to build half and blah, 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 blah. So that's why the stock had been under pressure. This thing's had the snot beat out of it. I think at some point it's going to be a good trade to the long side because there couldn't be any more bad news priced into it. So it's one that I'm certainly watching for,
absolutely. New entry,
a re-entry, because we traded around it pretty well in some of our portfolios here.
Yeah, we did. Thank you. In Oracle came back and refuted this situation. To Jason's point, and just to clarify everything. So again, what put the pressure on the stock again? It's been in a decline, so this was just icing on the cake, like Jason said, kind of opened up a new sore. Postponed from 2027 to 2028, but it wasn't because there's lack of demand or there are financing issues, they postponed it by a year because they can't get enough materials and they can't get enough labor. So remember, you and I have talked about this many times, Jason. You can build all or want to build all these data centers that you want. It still requires human bodies to build these things, right? And machinery and materials and so on and so forth. And now it looks like maybe we're starting to get stretched a little bit thin on building out all these data centers around the country. And this is the first time we've heard it, but I don't think it's going to be the last time we've heard there's going to be a delay because lack of material and lack of labor.
And it's convenient to say it too, right? So you'd think the cement stocks would have gone parabolic and the, the peripheral areas that show shortage of supply and such. So yeah, I agree. Certainly we're on the same page. That will be an issue for some time until AI can build robots, and then the robots will build all these things, and then we'll just sit and watch or something.
There you go. Sit in your truck and watch them.
Right.
All right, we'll continue our market discussion. And on the week on Wall Street, let's turn it over to Jack Saban. He's got news, traffic, and weather. Welcome back to the Jon Sanchez Show on News Talk 780 KOH. Happy Friday to all of you. All right, let's get into, what do you say we talk a little Fed for a minute, Jason, on this Friday? We can't wrap up the week without talking about the Fed. Now, here's a couple of things that were very interesting, folks, that happened today. Of course, Wednesday, we get the Fed interest rate decision. They cut rates 0.25%. They do the dot plot. Consensus is, maybe one more cut next year. Street says, no, probably 2 to 3 more cuts next year. So, it's not what I want to talk to you about. What I want to talk to you about is the Kevin plus Kevin show, Jason. Mm-hmm. Kevin plus Kevin. Today, and the market did not have any, because as soon as the news broke, I immediately looked at my screen to see where we were on the market. The president indicated today that Kevin Warsh has moved to the top of his list as the next Federal Reserve chairman, although others remain in contention, according to the Wall Street Journal. Now, the reason I say this is the Kevin show, because it's most likely, it's looking like at this point, it's going to be one of two Kevins, even the aforementioned Kevin Warsh or Kevin Hassett, the National Economic Council director, which, Jason, coming into today, the street absolutely had it pegged that it was going to be Kevin Hassett. Jason and I were talking over the break, and we were thinking, I'm wondering why, now what's different is Warsh is a former Federal Reserve member, voting member, etc. Very well respected. I would say, at least my take on it, just seeing him in interviews and things, I don't know about yours, he's quite a bit more serious than Kevin Hassett.
Yes.
You agree with that? Yeah.
Yeah.
Elizabeth Warren came out today, yesterday, she was on CNBC and said that she's worried that whoever Trump appoints, because remember, it's got to be confirmed by the Senate, is going to be, according to Elizabeth Warren, a sock puppet. Meaning all they're going to do is follow, whatever or go with whatever strings that the president pulls. I think the reason the market did not get excited about this, Jason, I'd love to get your opinion, is Hassett would have definitely been that person, I think, that, again, would have been the, more of a puppet type of chairperson. I don't think Warsh is that way. I think Warsh is, like I said, a bit more serious, obviously much more experience, having served time on the Fed, so on and so forth. And I think, again, that's why the street didn't get too excited about this choice.
Yeah, and there were some comments, too, of Jamie Dimon said in an interview he thought Kevin Hassett will likely lower rates in the short term, but Kevin Warsh will be a good Fed chair. That's what Jamie Dimon said.
There you go. I didn't see that. Okay. Right to my point.
Yeah, I think you've got one who will do Trump's bidding and one who probably will continue to do Trump's bidding, but do it in a more stoic Fed-like way. And I think that's also what Trump's looking for too. He probably would rather the illusion of not having a sock puppet, but really having a sock puppet. We'll see. I mean, clearly wants lower interest rates, wants the economy to have all the ability to fire on all cylinders. And, that's one of I would say the last things that are still slowing growth because rates are higher than inflation, which historically is a drag. I think 50 basis points over the next 6 months is not without question, especially if inflation continues to temper as it.
Absolutely. The president was asked today also where he thinks or where he wants rates next year. And he goes, around 1%. He said that.
Real
around
rates?
1%.
Right.
Yeah. 1%.
Real rates. Yeah.
So that'd be more than your prediction and my prediction of how much rates need to drop. But we will see. But
I mean, if the Fed can refinance all of their debt at 1%, then let's do it.
There you go. Amen to that one.
But that's part of the freak out, right? You've seen the 10-year we've talked about on Wednesday, right? The 10-year 20-year, they're not following short-term rates,
No,
right? They're telling
no.
you that this is about as low as we're able to sell you debt, Uncle Sam, for anything longer than 2 to 3 years. And that's the part that gets more concerning, is if the long end doesn't start to come down with these rate cuts, given that the market's stating they're going higher sooner probably than you think, Mr. President. So we'll see.
Yeah, absolutely we will. What else do we want to talk about? Anything on top of your mind? I'm just kind of thinking here. We covered rates. We covered the Fed. What else you want to talk about? What's on your mind? What's keeping you up at night right now?
Coming up,
Throw
I
something
think
my
we're going to
way.
start to get more data, right? I know it's near the end of the year, but
time,
we're going to get more real data. We'll get to really see
It's like you can't believe anything you get. You're getting September's data in December, and it's like, then this week there was a couple, I can't remember which one it was, there were a couple reports scheduled. They didn't even come out. They were on the calendar. They didn't even come out. So we're still not hitting on all 8 cylinders getting our economic data.
I mean, we got some color from the likes of Lennar and KB Homes, and those are tells. I know, talking with Dwight, you guys were always talking about mortgages. That's something that, if we can see some movement lower there, that hopefully will filter through to the rest of the economy. But I'd like to see at least the consistency of data come through, so the market can start to focus more on the data side and less on the interest rate game or the more near-term short-sighted stuff that it's focused on now. It may take its eyeball off AI and start to look more at the economy, which I would say should be more of the focus than day trading momentum stocks. But that's what I'm excited about, is getting real CPI and PCE and seeing what is the job market really doing? Is it slowing down? It
is a
confusing
mess is
right?
what it's doing.
Yeah. And we probably won't get real color until the new year.
Yeah, I agree.
Because we are coming into a quiet time of the year anyway. And that's what I mentioned. I felt like today's sell-off was a little more risk reduction than it was real ugly selling, because we've truly traded in this range. Looking at the chart of the S&P 500 since the beginning of December, it's just been up, down, up, down, up, down, and looks like a straight line. So can we hold the 6,800 level, or can we break up through the 6,900 level? It's truly just this channel that we're in, and I think it's going to be data that's going to help us decide which way we're going.
Well, Wednesday on the 16th, we are going to get the aforementioned jobs report. I'll kind of give you the latest indications at this point. So even as Chair Powell said in his press conference this week, Jason, he's not believing the data because of the delay and everything. He's like, I forget his exact words, but basically he inferred that what we're seeing is not true, like 40,000 average job growth. He goes, I think it's like -20 or something like that is where he really thinks that it is. So that's going to be interesting. I'm looking at the predictions for next week, and they're only anticipating 10,000 jobs created for the month of November. And when we get the non-farm payroll numbers on Wednesday.
Thursday CPI too.
Yeah, Thursday CPI. Private side, they're looking for 0 jobs to have been created. Unemployment rate should hold steady around 4.4. But yeah, and then let's go to the CPI and the PPI data, because that's going to be
we created a job this week.
We did indeed.
So
we're trying to create one.
Somebody else fired someone if it was 0. So
wait, say that again.
I said, well, we created a job. You said that there was 0. And so I said, then someone else must have fired someone. So
yeah, that'll
shame on that.
Data. Yeah. Yeah. I've never been asked for that survey.
Right.
Yeah. They've never asked me the survey.
It's unfair.
A lot of other government surveys we have to fill out, but never that one.
It's true.
I'm waiting. Like, come on. So let's talk inflation, because again, that's going to be, as you said, on the 18th. They're looking for about a 0.2% increase CPI. Again, we really have nothing to base it off of, so that'd be, I think, a little bit low if we get that.
Core still at 3%.
Huh?
Core still at 3% CPI.
That's it. We're a long ways away from the Fed's 2%.
Yeah, but we're cutting.
Yeah, but we're cutting. Yeah, don't forget that. We're always cutting. All right, we'll wrap it up. Let's turn it over to Kristen Snow right now, Traffic Center. Hello, Kristen. Save us. Welcome back to the Jon Sanchez Show on News Talk 780 KOH. Let's get our marketing director, Bailey Sanchez, joining us to kind of remind all of us all of the great things that she is doing for all of you, right? Again, we're everywhere. We're on YouTube and social media, and let's see if I can spur her to join us here. I didn't warn her that we were going to do it, so maybe take her a second to put on her producer's hat and join us here. Wrap us up, Jason, on the rest of the week. We're at the tail end of the earnings side of things.
Yeah, I mean, really not until Tuesday we get Lennar, right? So a lot of home builders this week. Lennar will be on Tuesday. We've got Micron after the close on Wednesday. I think that stock, even I am amazed how much that thing is up. Seagate, Micron, Western Digital, all the chip names, the storage names. So we'll get data from them. That will be very interesting. Street's looking for $3.91 on 12.8 billion of revenue. CarMax on Thursday, Darden's Restaurants, FedEx, KB Home, Nike, and then on Friday, Carnival, Conagra, Paychex. So maybe Paychex has something to say, but couple names to watch. Clear the home builders will get color from, especially given what interest rates have done recently and whether they have any color there.
Yeah, we're still hearing from Corey and Dwight. There are many of them, and I'm not going to name any names specifically, but just the industry in general, still struggling a little bit. I mean, we've heard from some of our clients that are involved with them that work for some of the major home builders, actually doing pretty well. But boy, if you look at the overall earnings per share numbers, Jason, they're really having to get very, very creative on the incentive side of things, and really having to do a lot to get the customer to come in at this point and buy. Is again, the mortgage application data is showing consumers just not willing to get off the fence yet. These mortgage rates have been so stubborn.
And they've also, many homeowners have really low interest rates and they can't afford to move because their mortgage rates are going to, or their payments are going to double, right? Other than new buyers, there isn't a lot of incentive to change where you're at if you have a loan with a 2 to 3% interest rate on it to swap it out for a 6% interest rate.
That fancy new house, though, there's nothing like the smell of a brand new house.
Nothing like the smell of depreciation.
There you go. Hey, not always. It's not like
it's buying
true.
a car. No, that's true.
Not always. Not always. All right, I got a little fun fact for you. You ready? We got a couple minutes left. I'm going to solve the biggest problem in the world that you may have, Jason. You ready for this? The Powerball jackpot right now is at $1 billion. And I'm going to give you very quickly 5 mistakes to avoid if you happen to win it over the weekend. You ready, buddy? You ready?
Yeah, please. Yeah.
Handing an unsigned ticket to the store clerk. You don't want to do that.
No.
Not keeping the ticket in a safe place, right? Don't just throw it in the side, panel of your truck, Jason. Don't do that. Telling
after I find out it's $1 billion,
right?
Just throwing it. Yeah.
Just throwing
it. What would you do? Like, I'm not even like I'd spend it. Like, just the actual minute after you realized you won $1 billion on a ticket. Like,
you mean after you wake?
How would you protect that thing? Right.
Yeah,
I mean,
right.
Yeah.
Well, here's the third thing. Don't tell everyone about your winnings.
No.
You think you have a lot of friends now?
Call an estate planning attorney.
Don't rush to claim your prize. Because remember, most winners are often given 90 days and a year to claim the prize, depending upon the state. So don't run out and go get that $1 billion, Jason.
No.
Yeah, right. And then lastly, deciding on the payout too quickly. I told you we had a client years ago that called me. It was on a Sunday afternoon. They were in Laughlin, Nevada, and they won. It wasn't a huge sum, not like in the billions. I think it was like 500,000 or something like that. Yeah, they were in a mad panic. All this, what I just shared with you, that's real stuff. The emotions just go crazy. It's like, what do I do? Because you got to tell them, do I want the payments? And, so on and so forth. Do you want to take the 30-year, annuity or a lump sum and so on and so forth. So anyways, don't say I never did anything for you. If you win that $1 billion over the weekend, now you know what not to do. Okay, my friend?
True. Yeah. Thank you. I really appreciate that. And
You're
call us if you won that $1 billion. And, I'd love to hear the emotions.
There you go. We'd love to hear that. All right, everybody, have a great weekend. Thanks for joining us. We'll do it again on Monday on the Jon Sanchez Show. See you, Jay.
Jon Sanchez is a registered investment advisor, and the opinions expressed by Sanchez Gaunt Capital Management, LLC on this show are their own and do not reflect the opinions of News Talk 780 or its parent company, Cumulus Media. All statements and opinions expressed are based upon information considered reliable, although it should not be relied upon as such. Any statements or opinions are subject to change without notice. Information presented is for educational purposes only and does not intend to make an offer or solicitation for the sale or purchase of any specific securities, investments, or investment strategies. Investments involve risk and, unless otherwise stated, are not guaranteed. Information expressed does not take into account your specific situation or objectives and is not intended as recommendations appropriate for any individual. Listeners are encouraged to seek advice from a qualified tax, legal, or investment advisor to determine whether any information presented may be suitable for their specific situation. Past performance is not indicative of future performance.